Question 01. What is bookkeeping? Answer. Bookkeeping is the process of recording and organizing financial transactions. Question 02. What is a ledger in bookkeeping? Answer. A ledger is a record of all financial transactions for a specific account. Question 03. What is the accounting equation? Answer. The accounting equation is assets equals liabilities plus equity. Question 04. Define assets in bookkeeping. Answer. Assets are resources or things of value owned by a business. Question 05. What are liabilities in bookkeeping? Answer. Liabilities are obligations or debts a business owes to external parties. Question 06. Explain equity in bookkeeping. Answer. Equity represents the owner's interest in the business, calculated as assets, liabilities. Question 07. What is a journal in bookkeeping? Answer. A journal is where financial transactions are initially recorded in chronological order. Question 08. What is a trial balance used for? Answer. A trial balance is used to ensure that debits and credits in the ledger are equal. Question 09. What is double entry bookkeeping? Answer. Double entry bookkeeping means every transaction has at least two entries, a debit and a credit. Question 10. What is the purpose of a chart of accounts? Answer. A chart of accounts organizes and categorizes all the accounts used in bookkeeping. Question 11. Define a general ledger. Answer. A general ledger is a complete record of a company's financial transactions. Question 12. What is a credit in bookkeeping? Answer. A credit is an entry that represents an increase in liabilities or equity and a decrease in assets. Question 13. Define a debit in bookkeeping. Answer. A debit is an entry that represents an increase in assets and a decrease in liabilities or equity. Question 14. What is a balance sheet used for? Answer. A balance sheet shows a company's financial position at a specific point in time. Question 15. Explain income statement in bookkeeping. Answer. An income statement shows a company's revenues and expenses over a specific period. Question 16. What is the difference between revenue and income? Answer. Revenue is the total amount earned, while income is the profit after deducting expenses. Question 17. Define accounts payable. Answer. Accounts payable are the amounts a business owes to its creditors. Question 18. What are accounts receivable? Answer. Accounts receivable are amounts that others owe to a business. Question 19. What is a cash flow statement used for? Answer. A cash flow statement shows how changes in balance sheet accounts and income affect cash and cash equivalents. Question 20. What is depreciation in bookkeeping? Answer. Depreciation is the allocation of the cost of a tangible asset over its useful life. Question 21. Define accrual accounting. Answer. Accrual accounting records revenues and expenses when they are earned or incurred, regardless of when cash is exchanged. Question 22. What is cash basis accounting? Answer. Cash basis accounting records revenues and expenses when cash is received or paid. Question 23. What is a journal entry in bookkeeping? Answer. A journal entry is the recording of a single transaction in the journal. Question 24. Explain the concept of matching principle. Answer. The matching principle requires that expenses should be matched with the revenues they help generate. Question 25. What is the purpose of the general journal? Answer. The general journal is used to record transactions that don't fit into other specialized journals. Question 26. What is a contra account? Answer. A contra account is an account with a balance that is opposite to the normal balance. Question 27. Define retained earnings. Answer. Retained earnings are the cumulative profits retained in the business after dividends are paid out. Question 28. What is a prepaid expense in bookkeeping? Answer. Prepaid expenses are payments made in advance for goods and services yet to be received. Question 29. Explain the term posting in bookkeeping. Answer: posting is the process of transferring information from the journal to the ledger. Question 30. What is a fiscal year in accounting? Answer: a fiscal year is a 12-month period used by a company for financial reporting, not necessarily coinciding with the calendar year. Question 31. Define closing entries in bookkeeping. Answer: closing entries are made at the end of an accounting period to zero out temporary accounts and transfer their balances to retained earnings. Question 32. What is AT account in bookkeeping? Answer: AT account is a graphical representation of an individual account that shows its debits and credits. Question 33. What is a cash discount in bookkeeping? Answer: a cash discount is a reduction in the amount due on a purchase when it is paid within a certain period.
Question 34. What is the purpose of a bank reconciliation? Answer: a bank reconciliation ensures that the balance on the company's books matches the balance on the bank statement. Question 35. What is the role of a bookkeeper? Answer: a bookkeeper is responsible for recording and maintaining a company's financial transactions. Question 36. Explain the term posting reference in bookkeeping. Answer: a posting reference is a notation used to link a journal entry to the corresponding ledger entry. Question 37. What is a trial balance error? Answer: a trial balance error occurs when debits do not equal credits, indicating a mistake in the accounting records. Question 38. What is a general ledger account number? Answer: a general ledger account number is a unique code assigned to each account for easy reference. Question 39. What is a controlling account? Answer: a controlling account is a summary account that contains the total of related subsidiary accounts. Question 40. What is the purpose of a subsidiary ledger? Answer: a subsidiary ledger provides detailed information about individual accounts that make up a controlling account. Question 41. What is the difference between cash and accrual basis bookkeeping? Answer: cash basis records transactions when cash is exchanged, while accrual basis records when transactions occur. Question 42. What is a credit memo in bookkeeping? Answer: a credit memo is a document issued to reduce the amount a customer owes due to returns or overpayments. Question 43. What is a debit memo in bookkeeping? Answer: a debit memo is a document issued to increase the amount a customer owes, usually due to additional charges. Question 44. Define the term contra-revenue account. Answer: a contra-revenue account is used to record discounts, allowances, or returns that reduce total revenue. Question 45. What is the purpose of an adjusting journal entry? Answer: adjusting journal entries are used to update accounts to reflect accrual accounting principles. Question 46. Define petty cash in bookkeeping. Answer: petty cash is a small amount of cash kept on hand for minor expenses. Question 47. What is the difference between a bookkeeper and an accountant? Answer: a bookkeeper records transactions, while an accountant interprets financial data and prepares financial statements. Question 48. What is an audit trail in bookkeeping? Answer: an audit trail is a record of all changes to financial data to ensure accuracy and traceability. Question 49. Explain the term book value in accounting. Answer: book value is the value of an asset as it appears on the balance sheet, often based on historical cost less depreciation. Question 50. What is a contra-asset account? Answer: a contra-asset account is used to reduce the carrying amount of an asset, typically by recording depreciation. Question 51. What is a voucher in bookkeeping? Answer: a voucher is a document that authorizes a payment and provides information about the transaction. Question 52. What is a fiscal period in bookkeeping? Answer: a fiscal period is a specific time frame used for financial reporting, typically a month, quarter, or year. Question 53. What is the purpose of the accounts receivable aging report? Answer: the aging report helps track and analyze overdue customer accounts. Question 54. What is cost of goods sold, COGS, in accounting? Answer: COGS represents the direct costs of producing goods or services sold by a company. Question 55. Define gross profit in bookkeeping. Answer: gross profit is the difference between revenue and the cost of goods sold. Question 56. What is net income in accounting? Answer: net income is the total profit after all expenses and taxes are subtracted from revenue. Question 57. What is a debit balance in an account? Answer: a debit balance in an account means that the total debits exceed the total credits. Question 58. Explain the term write-off in accounting. Answer: to write off means to recognize an asset or debt as uncollectible and remove it from the books. Question 59. What is the purpose of a bank statement reconciliation? Answer: bank statement reconciliation ensures that the company's records match the bank's records. Question 60. Define intangible assets in bookkeeping. Answer: intangible assets are non-physical assets with no specific monetary value, like patents or trademarks. Question 61. What is a contra-liability account? Answer: a contra-liability account offsets a liability account, showing a reduction in the amount owed. Question 62. What is the role of a trial balance worksheet? Answer: a trial balance worksheet is a tool to help ensure the trial balance is in balance and errors are identified. Question 63. What is a source document in bookkeeping? Answer: a source document is evidence of a financial transaction, like invoices, receipts, or purchase orders. Question 64. What is the purpose of a general ledger trial balance? Answer: a general ledger trial balance is used to verify that debits and credits are equal in the general ledger. Question 65. Explain the term fixed assets in accounting. Answer: fixed assets are long-term tangible assets like land, buildings, and equipment. Question 66. What is liquidation in bookkeeping? Answer: liquidation is the process of selling a company's assets to pay off its debts and close the business. Question 67. Define straight-line depreciation. Answer: straight-line depreciation allocates the same amount of an asset's cost as an expense each year of its useful life. Question 68. What is the carrying amount of an asset? Answer: the carrying amount is the value at which an asset is reported on the balance sheet. Question 69. What is the purpose of a trial balance report? Answer: a trial balance report is used to check the equality of debits and credits before preparing financial statements. Question 70. Explain the term contra-equity account. Answer: a contra-equity account is used to reduce the owner's equity section of the balance sheet, like drawing or dividends. Question 71. What is capitalization in accounting? Answer: capitalization involves recording an expenditure as an asset rather than an immediate expense. Question 72. Define amortization in bookkeeping. Answer: amortization is the process of spreading the cost of intangible assets over their useful life. Question 73. What is a purchase order in bookkeeping? Answer: a purchase order is a document used to request and authorize the purchase of goods or services. Question 74. What is goodwill in accounting? Answer: goodwill represents the premium a company pays when acquiring another business, reflecting the acquired company's reputation and customer base. Question 75. Explain retirement of assets in bookkeeping. Answer: retirement of assets refers to the removal or disposal of assets that are no longer useful. Question 76. What is negative goodwill in accounting? Answer: negative goodwill occurs when the purchase price of an acquired business is less than the fair value of its net assets. Question 77. Define working capital in bookkeeping. Answer: working capital is the difference between current assets and current liabilities, representing a company's short-term financial health.
Question 78. What is a book value per share? Answer: book value per share is the equity attributable to each outstanding share of common stock. Question 79. What is internal control in accounting? Answer: internal control refers to the policies and procedures used to safeguard a company's assets and ensure accuracy in financial reporting. Question 80. Define bank overdraft in bookkeeping. Answer: a bank overdraft occurs when a company's bank account has a negative balance, indicating it has overdrawn funds. Question 81. What is historical cost in accounting? Answer: historical cost is the original purchase price of an asset, used as the basis for its accounting value. Question 82. What is book value of equity in accounting? Answer: the book value of equity is the value of a company's total assets minus total liabilities. Question 83. What is the role of a subsidiary ledger control account? Answer: a subsidiary ledger control account summarizes the balances of all subsidiary accounts. Question 84. Define operating income in bookkeeping. Answer: operating income is the profit from a company's regular business operations before interest and taxes. Question 85. What is economic life in accounting? Answer: economic life is the period over which an asset is expected to be useful and generate economic benefits. Question 86. What is merchandise inventory in accounting? Answer: merchandise inventory represents the cost of goods held for resale. Question 87. Explain the term work in progress in bookkeeping. Answer: work in progress represents the cost of partially completed products in a manufacturing process. Question 88. What is a perpetual inventory system? Answer: a perpetual inventory system continuously tracks the quantity and value of inventory on hand. Question 89. What is a periodic inventory system? Answer: a periodic inventory system updates inventory records periodically rather than in real time. Question 90. Define absorption costing in accounting. Answer: absorption costing allocates all production costs, including fixed and variable, to the cost of goods sold. Question 91. What is variable costing in bookkeeping? Answer: variable costing only allocates variable production costs to the cost of goods sold. Question 92. Explain break-even analysis in accounting. Answer: break-even analysis calculates the level of sales needed to cover all costs and achieve zero profit. Question 93. What is a cost volume profit (CVP) analysis? Answer: CVP analysis studies the relationship between costs, volume, and profits to make business decisions. Question 94. Define margin of safety in bookkeeping. Answer: the margin of safety is the difference between actual or expected sales and the break-even point. Question 95. What is target costing in accounting? Answer: target costing sets the cost at which a product or service must be produced to achieve a desired profit margin. Question 96. Explain standard costing in bookkeeping. Answer: standard costing uses predetermined costs for materials, labor, and overhead to evaluate performance. Question 97. What is the direct cost of a product? Answer: direct costs are expenses directly attributed to the production of a specific product or service. Question 98. What is the indirect cost of a product? Answer: indirect costs are expenses not directly tied to a specific product but necessary for overall production. Question 99. Define variable cost in bookkeeping. Answer: variable costs change in direct proportion to changes in production or sales volume. Question 100. What is marginal cost in accounting? Answer: marginal cost is the additional cost incurred when producing one more unit of a product. Question 101. What is the contribution margin in accounting? Answer: the contribution margin is the amount left after subtracting variable costs from revenue and is used to cover fixed costs and provide profit. Question 102. Explain cost allocation in bookkeeping. Answer: cost allocation distributes indirect costs to cost centers or products based on a specific method. Question 103. What is activity-based costing (ABC) in accounting? Answer: ABC allocates indirect costs based on the activities that drive those costs. Question 104. What is cost control in bookkeeping? Answer: cost control involves monitoring and managing expenses to ensure they remain within budgeted limits. Question 105. Define cost variance in accounting. Answer: cost variance is the difference between the actual cost and the budgeted or standard cost. Question 106. What is cost behavior in bookkeeping? Answer: cost behavior refers to how costs change in response to changes in production or activity levels. Question 107. What is a cost driver in accounting? Answer: a cost driver is a factor or activity that directly influences the cost of producing a product or service. Question 108. Define cost center in bookkeeping. Answer: a cost center is a specific department or area within a company for which costs are tracked. Question 109. What is fixed cost in accounting? Answer: fixed costs remain constant regardless of changes in production or sales volume. Question 110. What is variable overhead in bookkeeping? Answer: variable overhead includes indirect costs that vary with changes in production or activity levels. Question 111. Explain the economic order quantity (EOQ) in accounting. Answer: EOQ is the optimal order quantity that minimizes total inventory costs, considering ordering and holding costs. Question 112. What is a just-in-time (JIT) inventory system? Answer: JIT is an inventory management system that aims to minimize inventory levels and associated costs by receiving and producing goods just in time for use. Question 113. Define total quality management (TQM) in bookkeeping. Answer: TQM is a management philosophy that focuses on improving product quality and reducing defects. Question 114. What is benchmarking in accounting? Answer: benchmarking is the process of comparing a company's performance and practices to those of industry leaders or competitors. Question 115. Explain cost of quality in bookkeeping. Answer: cost of quality includes both the cost of preventing defects and the cost of dealing with defects when they occur. Question 116. What is process costing in accounting? Answer: process costing assigns costs to products or services based on the stages or processes involved in production. Question 117. Define job order costing in bookkeeping. Answer: job order costing assigns costs to specific custom-made products or services. Question 118. What is activity-based budgeting (AB) in accounting? Answer: AB uses activity-based costing principles to create a budget that aligns costs with the activities required to produce products or services. Question 119. What is the direct material price variance? Answer: the direct material price variance is the difference between the actual cost and the standard cost of materials purchased. Question 120. Explain the direct material usage variance in bookkeeping. Answer: the direct material usage variance is the difference between the actual quantity of materials used and the standard quantity allowed for production. Question 121. What is labor rate variance in accounting? Answer: the labor rate variance is the difference between the actual labor cost per hour and the standard labor cost per hour. Question 122. Define labor efficiency variance in bookkeeping. Answer: the labor efficiency variance is the difference between the actual hours worked and the standard hours allowed for production. Question 123. What is the variable overhead spending variance? Answer: the variable overhead spending variance is the difference between the actual variable overhead cost and the standard variable overhead cost. Question 124. Explain the variable overhead efficiency variance in accounting. Answer: the variable overhead efficiency variance is the difference between the actual hours worked and the standard hours allowed for variable overhead. Question 125. What is fixed overhead budget variance in bookkeeping? Answer: the fixed overhead budget variance is the difference between the actual fixed overhead cost and the budgeted fixed overhead cost. Question 126. What is fixed overhead volume variance in accounting? Answer: the fixed overhead volume variance is the difference between the budgeted fixed overhead cost based on the expected production volume and the actual production volume. Question 127. Define standard costing system in bookkeeping. Answer: a standard costing system uses predetermined costs as a basis for evaluating actual performance. Question 128. What is variable cost per unit in accounting? Answer: variable cost per unit is the cost incurred for each additional unit produced. Question 129. Explain segment reporting in bookkeeping. Answer: segment reporting involves reporting financial results for different segments of a business, such as product lines or geographic regions. Question 130. What is cost structure in accounting? Answer: cost structure refers to the composition of a company's costs, distinguishing between fixed and variable costs. Question 131. Define activity cost driver in bookkeeping. Answer: an activity cost driver is a factor that influences the cost of an activity or process. Question 132. What is variance analysis in accounting? Answer: variance analysis is the process of investigating the differences between actual and budgeted or standard costs. Question 133. What is a standard cost card in bookkeeping? Answer: a standard cost card provides a detailed breakdown of the standard costs for producing a product or service. Question 134. Explain direct costing in accounting. Answer: direct costing also known as variable costing, includes only variable production costs in the cost of goods sold. Question 135. What is activity-based management (ABM) in bookkeeping? Answer: ABM focuses on using activity-based costing principles to manage and improve business processes. Question 136. Define transfer pricing in accounting. Answer: transfer pricing involves determining the prices at which products or services are transferred between different divisions or subsidiaries of the same company. Question 137. What is cost of capital in bookkeeping? Answer: cost of capital is the rate of return required by investors to provide funding to a company. Question 138. What is cost of equity in accounting? Answer: cost of equity is the return expected by equity investors for investing in a company's stock. Question 139. Define cost of debt in bookkeeping. Answer: cost of debt is the interest expense paid on a company's debt, including loans and bonds. Question 140. What is opportunity cost in accounting? Answer: opportunity cost is the value of the next best alternative that is foregone when a decision is made. Question 141. Explain the time value of money in bookkeeping. Answer: the time value of money recognizes that a sum of money today is worth more than the same sum in the future due to its earning potential. Question 142. What is sunk cost in accounting? Answer: sunk cost is a cost that has already been incurred and cannot be recovered. It should not influence future decisions. Question 143. Define cost allocation base in bookkeeping. Answer: a cost allocation base is a factor or measure used to distribute costs to cost objects, such as products or departments. Question 144. What is cost of sales in accounting? Answer: cost of sales represents the direct costs associated with producing the goods or services a company sells. Question 145. What is variable cost per unit of production? Answer: variable cost per unit of production is the cost incurred for each additional unit produced. Question 146. Explain the fixed cost per unit in bookkeeping. Answer: fixed cost per unit is the fixed cost associated with producing each unit of a product. Question 147. What is cost allocation method in accounting? Answer: a cost allocation method is a systematic approach used to distribute indirect costs to cost objects. Question 148. Define activity rate in bookkeeping. Answer: an activity rate is the cost per unit of activity used in activity-based costing. Question 149. What is cost driver rate in accounting? Answer: a cost driver rate is the rate at which a cost is applied to cost objects based on the activity level of cost drivers. Question 150. What is cost of quality report in bookkeeping? Answer: a cost of quality report breaks down the costs related to product or service quality, categorizing them as prevention, appraisal, internal failure, or external failure costs. Question 151. Explain cost allocation pool in accounting. Answer: a cost allocation pool is a group of similar costs used in an activity-based costing system. Question 152. What is process value analysis in accounting? Answer: process value analysis focuses on reducing costs while improving product quality by identifying unnecessary or redundant activities. Question 153. Define cost variance analysis in bookkeeping. Answer: cost variance analysis involves comparing actual costs to budgeted or standard costs to identify differences. Question 154. What is actual costing in accounting? Answer: actual costing uses real costs incurred for materials, labor, and overhead in product costing. Question 155. What is normal costing in bookkeeping? Answer: normal costing uses actual costs for materials and labor but applies a predetermined rate for overhead. Question 156. Explain full absorption costing in accounting. Answer: full absorption costing allocates all production costs, including both variable and fixed costs, to products. Question 157. What is variable costing income in bookkeeping? Answer: variable costing income is the profit calculated using variable costing principles. Question 158. Define absorption costing income in accounting. Answer: absorption costing income is the profit calculated using full absorption costing principles. Question 159. What is a cost center manager in accounting? Answer: a cost center manager is responsible for overseeing and controlling the costs within a specific cost center. Question 160. Explain strategy cost management in bookkeeping. Answer: strategy cost management focuses on using cost information to make informed business decisions and create a competitive advantage. Question 161. What is cost control chart in accounting? Answer: a cost control chart is a graphical representation of cost data over time, used to monitor and control costs. Question 162. Define flexible budget in bookkeeping. Answer: a flexible budget adjusts the original budget to reflect changes in activity levels and provide a more accurate cost estimate. Question 163. What is standard costing variance analysis in accounting? Answer: standard costing variance analysis involves examining differences between actual costs and standard costs to identify reasons for variations. Question 164. What is a cost accounting system in accounting? Answer: a cost accounting system tracks and records the costs associated with the company's products or services. Question 165. What is cost allocation process in bookkeeping? Answer: the cost allocation process distributes indirect costs to cost objects based on a chosen allocation method. Question 166. Define variable manufacturing costs in accounting. Answer: variable manufacturing costs are expenses directly associated with producing goods and vary with production levels. Question 167. What is cost estimation in bookkeeping? Answer: cost estimation involves predicting future costs based on historical data and assumptions. Question 168. What is a cost of production report in accounting? Answer: a cost of production report summarizes the production and cost data for a specific period. Question 169. Explain cost reduction in bookkeeping. Answer: cost reduction focuses on finding ways to decrease expenses while maintaining the same level of productivity and quality. Question 170. What is cost allocation rate in accounting? Answer: a cost allocation rate is the rate at which indirect costs are assigned to cost objects using an allocation base. Question 171. Define cost driver analysis in accounting. Answer: cost driver analysis identifies the factors that have the most significant impact on costs in an organization. Question 172. What is relevant cost in bookkeeping? Answer: relevant cost is the cost that will change as a result of a specific decision and should be considered when making choices. Question 173. What is non-relevant cost in accounting? Answer: non-relevant cost is an expense that remains constant regardless of the decision and should be ignored when making choices. Question 174. Explain incremental cost in bookkeeping. Answer: incremental cost is the additional expense incurred by choosing one option over another. Question 175. What is sensitivity analysis in accounting? Answer: sensitivity analysis assesses how changes in assumptions or variables affect the outcomes of a decision. Question 176. Define cost plus pricing in bookkeeping. Answer: cost plus pricing sets a product's price by adding a predetermined profit margin to the cost of producing the item. Question 177. What is transfer pricing policy in accounting? Answer: transfer pricing policy outlines the guidelines for pricing products or services transferred between different divisions or subsidiaries of a company. Question 178. What is value analysis in accounting? Answer: value analysis aims to reduce costs while maintaining or improving product quality by evaluating the value of each component or feature. Question 179. Explain reconciliation in bookkeeping. Answer: reconciliation is the process of ensuring two sets of records, such as bank statements and a company's records, match and are in agreement. Question 180. What is disbursement in accounting? Answer: disbursement is the payment of money, typically from a company to its vendors, suppliers, or employees. Question 181. Define book value per share in bookkeeping. Answer: book value per share is the value of a company's equity per outstanding share of common stock. Question 182. What is cash flow from operations in accounting? Answer: cash flow from operations represents the cash generated or used by a company's core operating activities. Question 183. What is cash flow from investing in bookkeeping? Answer: cash flow from investing reflects the cash inflow or outflow from buying or selling long-term assets like property or investments. Question 184. Explain cash flow from financing in accounting. Answer: cash flow from financing captures cash transactions related to raising or repaying capital, such as loans or issuing shares. Question 185. What is the indirect method for preparing the statement of cash flows? Answer: the indirect method starts with net income and adjusts it for non-cash items to calculate the net cash provided by operating activities. Question 186. What is the direct method for preparing the statement of cash flows? Answer: the direct method reports individual cash inflows and outflows from operating activities without starting with net income. Question 187. Define cash equivalents in bookkeeping. Answer: cash equivalents are short-term, highly liquid investments that are easily convertible to cash and have minimal risk of value change. Question 188. What is free cash flow in accounting? Answer: free cash flow represents the cash available for distribution to investors after covering capital expenditures and operating expenses. Question 189. What is working capital ratio in bookkeeping? Answer: the working capital ratio, also known as the current ratio, measures a company's ability to meet short-term obligations with its current assets. Question 190. Explain inventory turnover in accounting. Answer: inventory turnover measures how efficiently a company manages its inventory by comparing the cost of goods sold to the average inventory balance. Question 191. What is receivables turnover in bookkeeping? Answer. Receivables turnover assesses how quickly a company collects its accounts receivable by comparing sales to average accounts receivable. Question 192. What is return on assets (ROA) in accounting? Answer. Return on assets calculates the profit generated for each dollar of assets by dividing net income by total assets. Question 193. Define return on equity (ROE) in bookkeeping. Answer. Return on equity measures a company's ability to generate profits for shareholders by dividing net income by total equity. Question 194. What is gross profit margin in accounting? Answer. Gross profit margin calculates the percentage of sales revenue retained as profit after deducting the cost of goods sold. Question 195. What is net profit margin in bookkeeping? Answer. Net profit margin represents the percentage of sales revenue retained as profit after all expenses, including taxes. Question 196. Explain earnings before interest and taxes (EBIT) in accounting. Answer. EBIT measures a company's profitability by considering only operating income, excluding interest and taxes. Question 197. What is earnings before interest, taxes, depreciation, and amortization (EBITDA) in accounting? Answer. EBITDA is a measure of a company's profitability that excludes interest, taxes, depreciation, and amortization expenses. Question 198. What is liquidity in bookkeeping? Answer. Liquidity measures a company's ability to meet its short-term financial obligations using its current assets. Question 199. Define solvency in accounting. Answer. Solvency assesses a company's ability to meet its long-term financial obligations and stay in business. Question 200. What is profitability in bookkeeping? Answer. Profitability evaluates a company's ability to generate profit relative to its revenue and assets.